Hi, everybody. Good afternoon, good morning, and good evening, wherever you are. Thank you very much for joining the Boardroom Club today to our innovation conference, featuring executives from top tech companies across AI, analytics, cyber, fintech, quantum computing, CRM, and whatnot. My name is Yossi Garmazi. I'm a second-year MBA here at Cornell, and I'm joined here also by classmates and a good friend of mine, Alex Teig. Alex?
Hi, everyone. I'm Alex. I'm also an MBA student at Cornell Tech, and thank you all for joining.
Yeah, so today we are fortunate enough to interview none other than Yuval Tal, one of the most successful entrepreneurs coming out of Israel. Yuval founded two fintech companies and took them all the way public on NASDAQ. He also founded another company called Linguana, but this time, believe it or not, operates on the creator economy. Linguana is a global monetization solution that helps content creators to localize, dub, and distribute their videos globally. Yeah, besides that, he also the operating partner of Teammate, a venture capital firm that not only invests, but also helps entrepreneurs to accelerate their business and grow globally. And yeah, Yuval, thank you very much for joining us today.
It's my honor. Thank you.
Yeah, so Yuval, I thought to start with the easiest questions. So first of all, what led you to the tech world in the first place?
I think I went to study engineering. So now it's people who watch this video, it's too late. They're already business people. But I was drawn to engineering. I still think it's one of the best professions to study as a bachelor degree. And then I think there's a big component in career, which has to do with time and timing and location. So if you Silicon Valley and you're in a time, years that people invest, then you're on a trend. I think Steve Jobs did it. So Israel in the late 1990s and early 2000s was a really huge hub of entrepreneurship and technology and startups, and it was very, very tempting to join it. So I think there's a little bit of a luck and coincidence more than pure planning.
Yeah, definitely. And I noticed also that you were, before you founded all of the amazing companies, you were in R&D, product marketing, sales, and even corp dev. I was just wondering maybe if you can share with us, what are some of the key lessons that you learned in these years as an operator and different aspects that help you and contributed to be later on a successful entrepreneur?
So I did the whole journey. I mean, I think it's nice. You never regret what you do, but you regret what you don't do. So I've done the whole journey from QA to product to kind of real R&D to I think marketing, business development, and then CEO, which makes you much more qualified to understand what you manage afterwards, right? Because you know all the angles and you can appreciate. I don't think it's necessary, but I do think that it's important to appreciate what is a good professional in each one of those components, right? So you don't need to be a salesperson, but you really need to appreciate the courage to close a deal, and you need to appreciate the ability to create leads and the closure. There's a profession in sales which I didn't know until I actually did it. There is a profession in product. It's really a profession, and there's a very big depth in how deep it can go. So I don't recommend, and I wouldn't recommend people to go through this whole journey because it's years. But I'm obviously happy that I did it. That kind of made me qualified to be able to be a CEO and then to start a company and have the courage and confidence to lead it. So I think that's the journey.
Yeah, and
I was not good at all of those components. Like I know now that I wasn't good, but it was important to learn.
yeah, and I guess also it was super beneficial as later on as a CEO to really know all the different aspects of the business and how they affect the overall picture. And taking you now to Payoneer, can you share with us how the idea to Payoneer came about and what specific problem you try to solve?
So yeah, I would say again, I'm trying to give value to the people who listen. So I think when you start a company, when you join a company, when you become, I would say, a significant part of a leadership of a company, then you want to come with as many assets that you already have. Like, so if you go from nowhere and then suddenly you go into producing gum, then there's like, okay, so what do you know? So Payoneer is the second company that I started. So it's not about starting a company. I came from a space that I understood, that I knew, right? So I was in the payment space. I knew the players. I knew how to talk to banks. I knew where you can be innovative. A little bit knew what is new in the market. And I got into this prepaid space that was like at the time was really hot and upcoming. And there's a few things. So first, when you have a new product, typically, especially in fintech, the compliance on the regulatory stuff follow innovation. So you can actually be much more creative and fast moving before there is regulation. So you kind of grandfathered into a system. So I knew that, and we started with the prepaid. At the time, it was very domestic, and we decided to make it global. So we had the infrastructure so that it was already a thing that was mostly based for the Mexican who came to work in agriculture in the US. And then we took it from kind of that infrastructure and we took it global. So we knew there's a need. We knew that there's a potential. We knew there's a gross margin. We knew, I mean, all of that stuff we knew. We knew there's a market fit. And we knew that the regulation at some point will catch up. So it was kind of a, again, if I'm trying to give value to the listeners, it's a space that I understood. It's a space that I had the ability to research. It's the space that I had the ability to understand the regulation to the point that I knew what is kind of vague, what is clear, what is black and white, where you can play. And I knew how to get to the right investors, how to get to the right employees, how to get to the right initial customers. So that was the choice. And the market fit specifically, it was the beginning. Again, we started with teenagers. It was a bad idea, terrible space. Really, I mean, but if one thing take from this video, do not go after the teen market. It's a complex market. It's a dual, so you have to settle the teens and then to settle the parents, and then they fight, and then you have to get in between. Don't touch it. It's like not all spaces are profitable or solvable. So let someone else deal with it. And then we switched because the Web 2.0 started, and it was like the beginning of YouTube and marketplaces and Fiverr and freelancer.com and all Upwork, etc. It was the beginning. So there was a need for freelancer globally to get paid. It was very expensive to get paid. Only the banks would send a wire. We kind of jumped on that opportunity and we said, we're going to send them a debit card. And then you upload the money in the US and you download the money in Ukraine or Philippines or Romania, wherever the freelancer is. And we knew it's going to work, and we knew there's a market. We knew there's an international fee. We knew there's FX fee. So it was high margin from the beginning. And again, it's easy. Everything is so much easier in retrospect. But we kind of, there was the opportunity. We still do that today. So, I mean, it was a good market fit to the point that it expanded as many more services, but the need to sell, to move money globally for freelancers. This is not P2P. This is not for immigrants who send money home. This is for professionals who do professional work and you need to pay them, photographers, programmers, e-commerce, etc. That need is there, and it's part of the e-commerce infrastructure.
Yeah, amazing. And also, as the name suggests, Payoneer, you were essentially a pioneer in the space of fintech. And now we've seen a lot of fintech companies, specifically in Israel. But back then, fintech wasn't as big as it today, right? And can you share with us some of the challenges you face in convincing customers? Because at the end of the day, you took not one, but two companies in fintech space public.
So I would say in fintech in specific, there's two advantages to fintech, which is also annoying, but it's an advantage. So it's highly regulated, which means you need patience and you need to fight or navigate through a lot of annoying bureaucrats. They have no reason. They have their job security. They're not gonna, right? So, and you don't. So there's a whole tension between compliance and risk on the bank side versus energetic startup who's trying to move fast. So that's there. The advantage of this is that once you get to a critical mass, once you get a license, once you get a customer, once you get an infrastructure running, you're not exposed to this overnight change of some kind of technology that you are dead overnight. That kind of slow-moving regulation also protects the company from fast-moving changes. Right, so if you look at the SaaS industry in the AI space right now, right? So you have this, I don't know, text-to-image thing, and every day you're going to have a better product that comes cheaper or free, and then everything you do is kind of overnight redundant or obsolete. So that risk does not exist, and that's a good thing. That's the first thing. The second thing is it's a space when you don't have a situation where the winner takes it all. So if you look at Uber, then once Uber win a city, it's very, very difficult for second or third or fifth player have no chance. So you only have a place for one or two players. In the payment fintech space, you typically have room for multiple players, and it's kind of acceptable. The last thing, which I think is also very important, is that in many ways, fintech help each other. So if you try to get a deal with Amazon, and all they see is just major banks and then a fintech, it's going to be difficult for them to choose one of the fintechs, because like, why would you choose not a bank? And I think that if there's multiple fintechs, then it's much kind of more acceptable to use a fintech over a bank. So the fact that there's industry, so kind of we slowly kind of form into multiple companies that become an industry, that helped a lot, almost each other. So there's room for many players. The fact that there's many players that play fair, nobody fails, there's no fraud, all that stuff create confidence, and kind of it's easier to win over banks, which is the real competition. So that's the fintech. I would say that, you know, everything ever since I started the fintech, it's keep inventing itself in a pace that it's like you think it's over, like everything is done, and it's just becoming bigger and bigger and bigger, and more innovation. It's endless, and it's keep surprising me all the time. So it's always a good time to go into fintech.
Yeah, super insightful, and fintech does seem like a super interesting place to be. I can tell you that me and a couple of other friends are actually now in the fintech intensive here at Cornell Tech. So it was interesting to go into all the blockchain lectures and see what it's all about. Moving on to now Team 8. I know that Team 8 is Israeli based, and it's not the typical VC. Can you share with us a little bit about what Team 8 does and how it's specifically maybe different from other venture capital out there?
Yeah, so again, maybe I'll aim it for the people who watch and want or consider or have dreams to become entrepreneurs. So first, I do encourage it if it's right for you. So you want to investigate and then go for it. What Team 8 is trying to do is to try to eliminate a lot of the hurdles that are capricious or random for many people to not become entrepreneurs. For example, right? So you are a great entrepreneur, everything is fine, and you married with kid and a half. So now can you really take the financial risk of not having a salary for a year? Or it's not even a year, it's like for undefined amount of time. So you need a very patient spouse, right? So that's like, that's a risk that you can theoretically eliminate if you partner with a company who tells you it's okay. There's not getting a salary is not part of the risk that you have to take. I would say one of the biggest thing is like when you start a company and you just kind of out of nowhere, you come out of Cornell and you have no idea what's going on. The best advice I would give, and this is again, if you take things from here, this is genuine, strong opinion, strongly held. Don't do it otherwise. You want to start a company when you have a paying customer. Someone says, if you give me this product, I will pay for it. If someone says, yeah, sure, give it to me when I'll try it out, no. You want to say, if I had this, I would try it. There's many reasons to build companies, but if you as an individual taking the risk of spending all your time and energy on a product, make sure that on the other side there is real company with real people and that actually took the time to sit with you and understand what you're going to build and says, if you give me this product, I will use it and I will pay for it. And that's what this Team 8 is doing. They have this tremendous net of connection, and they will put you with the right CIO, CTO, head of business, whatever the thing is with like large companies, and you will sit with them and they will tell you, yes, this is what we need. This is the product. If we had it, we would use it. Right. So if you look at large companies, they have like gazillion requests by all the different groups in the company, and most times R&D is completely flooded. So they're sitting on a mountain of like a treasure of ideas, things that if you bring them, they will use. So you want to have access to those guys and then figure out what to do. So I think that what Teammate is doing in this case is they give you money, so it's security, so you don't need to be homeless when you start it. They give you access to decision makers to validate the ideas and adjust the ideas, so you don't need to zigzag with the concept too many times before you find the right market fit. At a given environment, there's a lot of things that in a startup that you don't need. There's no reason to do it initially, right? So HR you don't need. I mean, you can outsource, so they do HR for you. All the AIT stuff, all the whatever email engine, all the fraud protection stuff. So there's a lot of environment, and then there's kind of it's a support group of companies that work together in the same space. So you have the same challenges, and it's fairly the same. So the Teammate FinTech is like hub of companies in the fintech, so they have access to the same mentors and same perspectives, and so it's very, very professional. And again, if I would find if a entrepreneur would come to me and ask for advice, I would warmly recommend them to go to Teammate. I think it reduces the risk by a lot.
Yeah, it makes totally sense when you have all the structure that support you from every side. And another maybe follow-up question is that you meet with tons of entrepreneurs, but what is the first question that you ask them?
I think the entrepreneurs, it's even though I study bachelor and master engineering, I would say I would absolutely that it's really psychologically makeup, and it's not right for everybody. So sometimes if you look at the entrepreneur and kind of if I'm trying to assess, and it's right for everybody who watched the video to assess himself, right? So the job of the entrepreneur is really to push things against the odds and to be, of course, pathologically optimistic about everything and to run and try to be realistic and honest. At the same time, you have a lot of moving parts that each one of them can fail, and if they fail, everything is done. So you need to kind of balance a lot of moving parts. So that's there. You need to hire people that are better than you. So you need the courage to hire people that are really, really smarter and more competent and everything more new. And sometimes take courage because it's easier to hire people that just admire you and just don't like do anything you tell them to do. It's the psychological makeup, and I would just spend time on YouTube, talk to entrepreneurs, etc. There's also the issue: do you really, really, really want to do it? Like, is it nice because it's cool and then it looks much better on Tinder, or is it something that you're passionate about because you really want to succeed and build value? And there's many motivation why you want to do it. I mean, if you want to prove to your dad that you're good, it's fine. It's a great motivation. Just make sure that you really want to do it. And that's there. Another indication I would say for entrepreneurs that typically ask is if they've done something exceptional before. So Cornell is definitely one, right? So getting into Cornell and finishing it, that's a big deal. But I would also look for other things that are exceptional. I don't know, just running, marathons or Ironmans, or being a chess player or being a pianist, or something that is exceptional. So I wouldn't make the startup your first exceptional experience in life. Just do something that requires a lot of dedication and discipline and emotional challenges, and then go to start a company. It's a tough ride.
Yeah. So I guess preparation is a key. That's what I will take from it. And one of the most important phases of starting a company, and specifically a startup, is the ideation part. How long you believe an entrepreneur should spend on the ideation phase when starting a company? How long do you think they should interview customers or potential customers as part of this phase?
So when I spoke about Teammate, I think the process of meeting all the important people on the corporate that's part of ideation is super critical. all the stories about, sitting in a beach in a vacation and hey, let's start a company, and the next thing you know, you go public. That's all wrong. Never happened. So you have to go through a really, really diligent zigzag until you find what you think is a good match, and it's a good theoretical match. And even then, you're still in limbo. I would say for Linguana, which we did start the ideation within Teammate, we created videos and we tried to be influencers and we tried to be Instagram, whatever. Yeah, we try to sell hats, whatever. We try to do stuff that we can see how it works. And then we try to be YouTubers. So there was we went to the conferences and we see what's existed. And we were trying to think what is scalable, VCable company that you don't need to be burned, right? So if you are a YouTuber, for example, then most YouTubers, they get really excited and they do phenomenal work. And after 3-4 years, they're burnt out because they need to come up with a new video every few days. And over time, that's exhausting. It's not scalable. You can't take it public. You can't, right? So we were trying to find out in that space what can scale. And then we find out that, taking the content global and monetize it globally is something which you can do in large scale. You can produce a factory and it makes sense for the creators to outsource it to someone else to just do it for them. And that's something which we scale now. It also came up together with the GPT, etc. So everything's kind of merge into perfect timing. But ideation is super, super important. And again, I don't think you need to make a good move. So anyone who watched the video is probably in the process of ideation for years, right? All of the people who watched the video at some point had ideas. Maybe I should start a company, and that idea. So if you have something and it finds you and something excites you, I don't know. If Alex is into health, digital health, okay, then you can just put on TikTok follow all the different companies in digital health, see what's going on, see what's new. And then, with this new thing with AI, every day there's a new agent, etc. Then something at some point going to catch you. And then you say, this is what I want to do. I want to dig deeper into this. Right? So it doesn't need, you don't need budget. You don't need anything. You just need to kind of play with the ideation until something catches you.
Yeah.
I would say, just for the ideation, when you do have ideas, don't try to get validation from your neighbor, okay? It's like find industry experts and get validation from them. So once you have an idea, there are people who knows if it's valid or not. Find those people first before, right? So then the tendency is to try, you're so excited, you try to ask anyone who's willing to listen to you what they think about it. And then they're going to decide but it's wrong. Just in any industry, there are people who know, find them.
Yeah.
Okay.
Amazing to hear it and super insightful. And one question for myself before we moving on to Alex is about IPO. At the end of the day, you took two companies public in the fintech space. So do you have any recommendation about do and don'ts when a company considering an IPO, especially today? I mean, in the last year and a half, it seems that there has been a stop in the company that going public, but now it seems more that there is a pipeline of companies that are ready to go this path. What do you recommend them to do before starting?
So when you start a company in the ideation, you also know the market size. Market size matters a lot, right? So there's certain things that, like I mentioned, the teenager and there's certain things that the market is not big enough. It's not going to work out, and the market is limited, and the destiny of the company is to maybe be sold, but most likely you can be profitable, maybe, or you just don't have a chance. Many of the companies should not have started from beginning. There's many companies that there's no reason to start them whatsoever. It's just waste of time. And there are people who knows it. So I would say that whether the company can go public or not is decided when you find the idea, when you start a company. So there's certain company who can go public and certain company who cannot. In both companies in fintech, it's very, very IPO friendly, right? Because it's predictable, it's regulated. You have real companies, big company who uses you, so you get references. It's not, it doesn't represent any high risk. It doesn't represent any kind of fashion thing that just fly by. So it's sustainable, and the banker likes it, and the investment likes it. So it's kind of a, I guess, boring, nerdy space that will continue to generate IPOs. Practically in the preparation, in both cases, I find people that are better than me to lead the company to IPO. So I stayed in the company, of course, I was part of it, but all that investor relation and the jargon and the language that you have to speak with the market is a profession that I chose not even learn, not even to try. So there's a whole protocol, and there's a whole investor, all the people with the suits and the cufflinks with the initials. It's like a whole different species, which I chose not to be part of. So so on a board, and you make a decision, etc. But there's a whole. So in my case, it was choosing people that are better than me to lead the company to IPO, which is obviously by far the right decision. Yeah, I would say again, going back to who's a good entrepreneur, who's not, part of it is to know who you are and what you're good at and what you're not good at. And it's something which sometimes you meet people that you know, that you see them, you talk to them, you see, wow, okay, this person is way better than me in this. And then you need the courage to reach out and get them to work with you. And that's like, so you need the confidence, and you need the self-awareness to know your limits, to know your psychological makeup.
So put the right team around you.
See, put the right team around you or above you.
Yeah.
As you said, wait for the right timing, because if you go public against the market, it's over. But when you go public with the market, it's very generous. Sometimes you want to try to go market, but then it's really just to show off, and then you get bought. Okay, I would say again, this is like MBA, but it's rare that you have two private companies buy each other. It's very common when you have a public company buy a private company. So when a public company buy a private company, it's more generous for everybody, and then it's kind of a win-win-win. So the investors wins, the buying company wins, the selling company wins, the selling investor wins. So I would say it's just kind of more common. So you can build a company with the intention to go public, but then you sell it before it goes public. And there are bankers who don't know how to navigate through it. But what I would say that because many of the people who are in Cornell may actually be bankers, bankers have done it many times. The entrepreneur is doing it often for the first time. So there's a lot of teaching between the bankers and the entrepreneur, like this is the jargon, this is the terminology, this is how you're supposed to act, this is what I want to hear, this is the language. So the entrepreneurs might be very, very excited about the product and the technology behind the product, which nobody cares. People care about the growth, the numbers, the margin, the gross margin, the unit economics, whatever. And kind of all that education needs to be done between the banker and the entrepreneur before the IPO or M&A.
Yeah. So super insightful, Yuval, and thank you very much for answering all my questions. I appreciate it. And yeah, Alex, without further ado, the floor is yours.
Yeah, thank you. Thanks so much. Really continuing talking about the fintech industry. You know, we've seen fintech has exploded in the last decade from Tipalti, Rapid, eToro. How do you see the industry evolving? Are we headed towards more consolidation, more IPOs?
The fintech, I keep being surprised by how every time it's reinventing itself. Every time there's a new payment method. It's almost like the fate of payments, and fintech is very big, but I will talk about payments, right? So each one of us, right, have coins, right? So you still have coins. There's still coins. This is like 4,000 years ago. I don't know, there's maybe less, but there's like thousands of years ago coins, and then you have notes. You have like paper, like $100, whatever. So you still have papers, and then there's still checks in massive amount, and then there's still credit cards, and there's still wallets, and there's all the blockchain and the Bitcoin stuff. So it's just add up. Nothing goes away. It's just adding up. So that's kind of the fate of payments, which means there's more and more ways to collect payments, and there's more and more ways to distribute payments, and it's just increasing, and then it's just with new innovation, and then it has this one have integration, this one have different blending in, different goes into a cell phone. It's just coming up again and again and again, and it's endless, and I don't think it's going to end. Now I'm not worried about fintech. It's very linked to the interest. So as long as there's high interest, people will go to a long way to move your money, because when it's in transit, you make money from the interest, or you make money from the forex. So it's really invite innovation. There's just a lot of money in it. So if this was a question.
Yeah, no, it's a very exciting space, and a lot of students at Cornell are definitely looking to join it post-graduation and are very active in the space. But really changing direction, 2 years ago, you started Linguana, your first non-fintech startup. We talked a bit about, what Linguana is, but what really inspired you to make the leap and, move into the creator economy?
So sometimes things find use. Like we spoke about the ideation. I think that how people consume media is changing globally in such a pace that it's mind-blowing in a sense, right? People do not watch ABC, NBC, whatever, Saturday Night Live. I mean, this is over. TV is over in no time, right? So people consume YouTube, and then out of nowhere they consume TikTok. And then when they start to consume TikTok, YouTube and Facebook immediately copied the TikTok to be able to have the same shorts and reels. So the way people consume media have democratized like overnight, which allowed, if you like, in many ways, the same way that e-commerce have become very entrepreneurial, because everybody had a store on Amazon. Everybody create content. Well, not everybody, but I mean, millions and millions of people create content. And actually, many of them actually make money from it. And I found it to be fascinating. And I want to be part of that revolution. And I was trying to find a way. And it's not completely non-fintech. The way we work, we take content in an industrial way. We take content globally in all languages, but we do it in an industrial, kind of very high quality Netflix level globally. But we do actually have a fintech element to it, because we do it for free and we share revenue. So in many ways, we subsidize, or we have used factoring. So it's not cost for the YouTuber, and we share revenue if they make money, and we take the loss if it does not make money. But for us, it makes a lot of sense, and for them, it makes a lot of sense. So it is, in a way, a fintech type company. So yeah, the business model is important. But the space of creator economy is just really starting, and it's just what people create is just amazing, amazing. It's just I think there are like 75 billion views of YouTube a day, and this is just YouTube. So I don't know what happens on TikTok. It just, I mean, yeah, and I was never so fascinated by industry as this one. It's, by the way, it's not regulated, so it's not like, I mean, it's a video, so you take it down. There's nothing. It's not like you finance terrorism. You just upload a video. Doesn't work. So it's actually a refreshing change to work in a space that is very innovative without almost any limitation.
And do you see that changing? I mean, when we're looking now and how quickly it's changing and how much it's exploding in the next kind of 5 to 10 years, how do you see the creator economy evolving and growing in different trends?
I think that over time, people will start to get used to some kind of quality. So even if it looks user-generated, it's not going to be user-generated immaturely. It's going to be user-generated by people who know how to tell stories. So people are going to be really professional about being able to compete, to keep you kind of really engaged in a video. So that's the whole art of storytelling will become more professional. So that requires certain talent and certain budget. I really, really hope it's going to continue to be as distributed as is. So right now, you don't have advantage if you're CNN or NBC or Discovery Channel. Anyone can take content and produce it and tell a story in such a way that people will watch. And I hope it's going to stay. I don't know, but I hope it's going to stay. Just based on the competence of the creator, not based on how much budget you have. It's really didn't happen in history. Typically, you need a big budget to build, a car company. You need like huge. Okay, so it doesn't happen. But to create a channel, there's no barrier to entry. It's beautiful.
Yeah, no, it really is. And I think I really agree with you. And I think it will continue because people want authentic storytelling. People want to see people who are real. And that's really what we're seeing in the content creator space and what's gaining a lot of traction. But given that you're juggling roles at Teammate and Linguana, how do you manage your time and energy between building and investing?
So I enjoy much more building than investing. And I wish all the people who watch the video to be part of a collective group that create value. I think it's if you look, most people have jobs, but for those who went to Cornell, they have the opportunity to actually have a career, not a job. So if you have a career and you can choose what to do when you go to work and how to build and spend your time, I would absolutely recommend considering being part of something that that creates value, that you become part of any kind of industry. You're part of e-commerce, you're part of payment system, you're part of a creator economy, you're part of something that makes a difference. And so I wish anyone who actually went all the way and with the motivation to study in Cornell to look at a career and talk about time, etc. I don't think there's better. And I've met many very rich people, and I took company public twice, so I'm also okay. There's nothing better, okay, to wake up in the morning and to go to a company and together with other people create value. It's like there's kite surfing doesn't do it. And whatever sports you do, whatever hobby you have, there's so much time you can go to the beach and watch nothing. There's at some point being part of this energy that figure out things and deal with real challenges and try to get customers and try to give them products that they will use and be part of being part of relevant space. That's beautiful. And then it's creations. It really is art. Create something. It's beautiful. Then it sings. It moves. Make noises. Have kids. It does something, right? So yeah.
Absolutely. I think value is something that a lot of Cornell students are thinking about now that they're looking out into the job market and kind of thinking what their next step is and what startup to join. I mean, looking back at your journey, what advice would you give to your younger entrepreneurial self?
So the entrepreneur side, I would actually take what you said. I would differentiate between values and romantic ideas and kind of I want to do something that helps poor kids in Africa, okay, and separate it from entrepreneurship. The likelihood of a startup to succeed is very low, right? Statistics it doesn't okay. So and you as entrepreneur, I mean, if you look as an investor, you make 10 investments and one of them give you 100 times the amount, and then you're fine. So you don't care about the 9 others, but you don't care. Like you send a check and that's it. It's done. When you actually in a company, you are risking your time. There's a finite amount of startups you can actually be part of. At some point, you get too tired, too bored, too beaten up, and you just go to work for a bank. So so you want to make sure that you spend the time right. One of the key elements, this is my advice, is don't mix any other ideological agenda in working in a startup. So you can work in a startup that you enjoy, that you like the space. But if you work in a startup because it helps someone and you feel that you really need to help the poor handicapped people in Seattle, or whatever, homeless people, then you reduce the chance of the company to succeed by a lot. So try to look at the bottom line. The bottom line globally, and we saw that Payoneer a lot of time, right? So you have a set of values because you grew up in St. Louis, and it's very different than set of values of someone who grew up in Delhi. And it's very different than someone who grew up in Europe. And there's nothing that combine all those values except bottom line, which is making money. And it's not because it's not cheesy. It's just allow people to operate together, different people from different values. Once you make money, you can donate it to anything you want. But when you start a company, try to avoid any other ideological agenda other than creating value for shareholders.
Yeah, I think that's really good advice. I mean, as a person who has had such a long journey, what do you think in terms of mentorship, or who has been a mentor figure that made a big impact on you? And how should we as young people think about mentorship going forward?
Did you just call me old?
No, just experience. That's it.
So I would say the art of receiving advice is super critical. Like, if you want to get advice, you want to find someone that you really, of course, appreciate. I give you a few tips, right? So you find someone that you really appreciate in the space that knows what you're doing. This is not your neighbor. This is not your teacher. This is someone who's in the space that is willing to give you the time. You want to be fairly concise of telling the story. And then if you tell your story, also personal stories, make sure that you say everything that is also unpleasant to share. So if you attempted something multiple times and you failed, do not forget to mention it, because eventually the advice and mentorship you're going to get is based on the story you say. The story needs to be concise, accurate, but also includes all the bad stuff. Otherwise, the advice will be very limited. And that's what people do. They give 80% of the information, and then the minute they finish saying the information, they already know that the advice is suboptimal because critical information is not shared. So don't be embarrassed to share like all the information. It's very important. Who do you find? How do you find? Like, you find a rabbi or a priest, then his advice will be limited to the space that they understand. And then you're also stuck with the fact that you cannot not follow it. You have to follow it because it's like he's your guru. So find people that are relevant. Find people that if it give you advice, they're open to change their mind, that you don't have to follow the advice. Find 2 or 3 people so you can actually, after you hear multiple advices, you can combine it and say, okay, I get this, I got what I want. The average is what I can use, and spend a lot of time on it. Yeah, be ready to tell the story in a very concise way so you don't waste their time. And people want to give advice, so don't feel like so lucky that they're willing to talk to you. People, if you ask advice because they're entrepreneurs, most people, I mean, there's some kind of, I guess, entrepreneur brotherhood. If an entrepreneur will come to me and he's going to be in a junction, I will help them, right? So I'm not the only one. It's like, you understand the stress they're in, you understand the junction they're in, you understand that your advice can actually make a difference. So you take the time, maybe it's in the car, maybe it's in the whatever, but you take the time, it's very concise, very short, and you give them the advice. So it's a big deal. It happens all the time. And then don't be embarrassed to get advice from many, like, there's no one is too senior to give you advice, or just don't be afraid of it.
I think that is a really great note to end on. Yuval, thank you so much for your time. Really appreciate it, with all of your valuable insights, and I'm sure there'll be a lot of takeaways for all of our listeners. So thank you so
You're
much.
welcome. I have a LinkedIn, so people are welcome to reach out and ask for advice.
So, Yuval, thank you very much again for joining us, all of your insights. Great advice indeed. And for everybody else in the audience, stay tuned for the next few episodes. We have the CEO and founder of Sierra Island, the Redis, CTO of NVIDIA, and a bunch of other fascinating companies showcasing Israeli innovation. And yeah, thank you very much, Yuval, and hopefully see you soon.